Hello investors. The last few months have been challenging. You have so much global and domestic events happening which have generally been negative that the markets have been in turmoil. But in all these events that are playing out, one thing is there, that in spite of all the negative news, the markets are not going down. They fight back and pull up. For example, in the last 2 months, we've had this whole tariff issue, the Trump tariff thing, and global markets, especially the US, went in for a sharp fall. But as time has passed, things have got resolved. The markets are clearly telling us they don't want to go down. In fact, they are pushing up. In the Indian context, we had a border problem with Pakistan. Again, a factor that could trip the market big time. Barring 1 or 2 days of volatility, you will find that the markets do not want to go down on bad news. And that's something that I really want to cover today, that irrespective of whatever the narrative, whether you are seeing it on the geopolitical side or the economic side or what have you, the markets are telling a different story. And today I want to really cover that and share with you how we are bracing our portfolio for these times. As I said, where the narrative is bad, the panic is high, but the markets are telling a different story. The first thing I would like you to see on your screen is the S&P 500. The S&P 500 is, as I say, the mother index. It is the largest market cap, top 500 companies in the US. And what you see is a chart for the last 6 years. You can see on your left the COVID fall, a sharp rally in 2021. But 22 was a difficult year because of the Russia-Ukraine war and the commodity spikes that there were. Post that, you can see at the dotted black line how it broke out of this in early 2024 and went on to make new highs. Once Trump came into the play, there was a sharp correction. This was the correction of the tariffs. However, you will see very interestingly that where this correction stopped was exactly the breakout point in the post-Ukraine consolidation. As I said, that it is statistically, geometrically very beautiful that very often when breakouts happen, the pullbacks retest the previous high. And you will see to the dot in the chart that the pullback that happened towards around 4,800 in the S&P 500 was exactly the point where the breakout happened. In fact, this confirms that the uptrend is intact. You can see as the whole tariff issue is getting resolved, the markets are pushing higher. I dare say, or I suspect, that we will see the US heading towards its earlier lifetime highs. And if the US does that, it is not going to be long before a lot of other global markets also follow the path. If you look at in these times of uncertainty, where the narrative is that, the US wants to push NATO hard, they are being pretty harsh on Europe, but the European markets are doing a different thing. In fact, interestingly, the European markets are at lifetime highs. In all this tariff turmoil, no special deals yet being set out with the Europeans, but the European markets are telling a different story. So as I've been saying earlier, that there is a big mismatch between narratives which are negative. I mean, if you hear about the economy, everyone was talking about stagflation. Now there's consensus feeling there's recession, but European markets are at lifetime highs. So this does not happen when things actually at an underlying level are wrong. And this is where I feel the big mismatches. This is where the big opportunity for investors in times of uncertainty, markets are showing strength. This clearly tells us that going ahead, the markets look to be wanting to push higher. And that is why I feel a lot of new highs will be made. If we move ahead, you will see the India story. Let's take the Nifty. You can again see on a 6-year chart that we had a fall in COVID, post that the rally, the Russia-Ukraine war led to a global consolidation and the breakout. So what I'm trying to show you is that whether it was the S&P 500 chart or the India chart, the quantum of moves may be different, but the broader patterns remain the same. If the US and Europe make new highs, India is not going to be left far behind. And you can see the fall in India, which was much shallower than what we saw in the US. And again, the markets are moving higher. This is in spite of the fact that we've had geopolitical issues. We've had a kind of war with Pakistan, and certainly this could spook the markets big time. This was not normal. However, post the cooling off of tempers, you'll clearly see the markets getting higher, and the markets are brushing that off. So as far as India goes, we still feel that politically there is continuity. We have one of the strongest governments in power in India in a long time, and even globally, where governments are changing a lot. Macro stability continues. I guess you can start seeing FII flows which have already started trickling. These numbers accelerate. I feel our macros will improve further. Crude has been declining, which is our largest import bill, which is again very, very positive. RBI is pushing liquidity, and we feel that sooner or later we are going to see a deal between the US and India, which again we feel could be positive. So in all these scenarios, in spite of the current volatility, you see that markets are pushing higher. And that's why we feel that if you look at the Indian markets, and this is a shorter time frame, this is the 1 year time frame, you'll find that what happened was that we corrected September onwards, and you can find from 26,300 we slid down all the way to around 22,000. Post that, there was a pull up. Again, there was a retest of those levels, and you can clearly see that the markets have made what we call a double bottom. You can see that W-shaped formation and a breakout post that. In spite of the whole border issue, you'll realize that the markets have pushed higher post that. We feel the market would head to around 25,800 to 26,000, which is very near the previous lifetime high. This is keeping with the overall picture that what we are seeing in the globe, that markets globally are pushing to lifetime highs. In this context, one observation is that the most important sector in the Indian markets is banking, because of its highest weightage in the Nifty. The Bank Nifty has broken out to lifetime highs, much before the Nifty has. This is again very, very significant, because when your lead sector breaks out to new highs, it's very often that it's just a matter of time where the broader markets will get there. So this for us is very, very positive. This also helps us in shaping the portfolio, because this makes us understand that a sector that has underperformed for almost 5 years is again coming back into the leadership. And that is why you will notice that in your portfolio, in the last few years, we have been moving our weightage in banks higher. And because we feel the leadership in the next bull market will be banks and financials. The whole small cap, mid cap, there's a thinking that, oh, small caps are a bubble and they are not likely to perform. We don't agree. We feel that there is money to be still made in small and mid caps. Yes, it will not be as broad-based as it was earlier. You will have to be selective, but underperformance and outperformance will be there in the sector, in the space. But you will still have some very good outperformers in the mid and small cap plays. It is not a time to just throw away small and mid caps because they belong to that category. We feel that still there are a lot of stocks that will do well as the numbers play out. Thematic trends. This is our research that we do. This is the back end. Here we have, as I shared with you earlier, classified 43 unique industries. We rank them on various time frames, not just price but also linked to volatility. You can clearly see that the sectors that are leading this are, of course, defense, NBFCs, financials, healthcare, pesticide, agrochemicals, metals, hotels, fertilizers. So there is a shift that has happened, and you can clearly see that in the marathon portfolio, we have a good amount of weightage in these sectors. If we are underrepresented, as I told you in the case of banks, you will find that we are moving more towards banks and financials. So in this sense of the term, we will and are aligning your portfolio with the trends that are playing out. As I said, we know the last few months have been difficult. They have been challenging. There have been periods of underperformance. But as new leadership is emerging, as new trends are emerging, as the markets are heading to new highs, in spite of all the negative narrative that there is in the market, we feel that the outperformance or the catch-up will happen in these sectors and spaces. So rest assured that we are proactive, we are doing everything that is required, and these trends or themes are what lead the market now, and you can clearly see that these are what dominate your portfolio. With that, as I said, tough times don't last, but tough people do. We leave you for this month. Challenging times, but remember, the narrative is negative, but the markets are saying a different thing, and we are slaves of the market. We remain optimistic, bullish, and we see clarity and positioning in the trends that we think are going to lead ahead. Thank you.